Welcome back, everybody. Thank you so much for clicking on today's video. Today we're going to be doing a video about Churchill Capital. Before I start the video, guys, please make sure to leave a like on the video below. Subscribe to the channel for more awesome content. Join the family, guys. Let's go on our investor journey together. Today we're going to be talking about Cciv, or hopefully soon known as Lucid Motors. Is Churchill Capital stock a good buy at $22.92? Is the stock actually worth an investment? And where do I see the stock actually going in the short and the long term? So if you guys don't know, if we look at the 1 year chart altogether here, we can see this thing IPO'd September 18th of 2020. It was just a blank check company until, there was rumors going about that Churchill Capital was going to merge with the EV startup known as Lucid Motors. If you guys don't know what Lucid Motors is, it's an EV startup based out of Arizona, right? Set to basically rival the next Tesla. And Lucid Motors is doing a very good job of trying to expand as fast as possible, right? They already have a couple of factories run up. They're building a factory in Saudi Arabia. Their reservations for their vehicle have already topped out, which is very, very good. So the company in itself is doing a very good job, but it has kind of left a sour taste in people's mouth. When is Lucid Motors actually going to get started as a company? When is it actually going to start selling cars? And how is this related to Churchill Capital as an overall stock? So when there was rumors that the stock was going to merge, we see this high peak here. Stock hit about $63. And when the merger actually did get announced, Churchill Capital slowly started to fall back to its low time levels. So going from all the way from $64 down back to $22, the stock has lost 66% of its value, and it's left a sour taste in investors' mouth because a lot of people who are holding it don't really know what to do with it. A lot of people are sitting here saying, okay, I lost on the investment. What should I do? But I do want people to understand that there's a lot of good reasons on why Churchill Capital is actually a very good buy at $22.94. Obviously, everything I say in my videos is not financial advice. It's just my personal opinion. But if we take a look at the EV sector alone, a lot of the market in itself still has a lot of room to grow, right? So the EV market is still very explosive and it's still growing very fast. So there are lots of room for competitors, especially with Lucid Motors. It's going to do a very well as a company only due to the simple fact that the EV market is exploding like crazy. On top of all that, Churchill Capital or Lucid Motors is endorsed by a lot of big-time investors. It's even got $1 billion funding by Saudi Arabia, which makes the stock a lot more appetizing. But where do I see Churchill Capital actually going in the short term? So the dust has settled. When the rumors were spiking, we saw Churchill Capital go all the way up to $66. Now it slowly fell back down, and a lot of people are kind of wondering, is it actually going to be able to go up from here? And what's my overall price target for the stock? Well, we have regained back the 22 level support, which is very, very good. So a lot of analysts are speculating that Churchill Capital is going to slowly start rising up once again. Now, I don't know if it's going to retract back to those $60 levels just yet. I think people are kind of waiting on more confirmations of the actual merger. Even though a merger has been confirmed, we have to wait for the ticker symbol to change and for the merger to actually go through and stuff like that. It does take a while, but like I said, analysts are pretty bullish about the fact that Churchill Capital is going to be on a slow increase. We definitely have seen a huge retraction in the EV market in itself. A lot of people are thinking that it's overvalued, but for me personally, I don't think that the EV market is overvalued. I think that it does offer a lot of long-term support. But if you are buying Churchill Capital stock at $22.95, I want you to know that it's going to be a longer-term set play. And the reason this is because a lot of EV companies take a little bit of time to actually get going. They have to make sales. They have to be profitable. Even people who are holding Tesla know that it took Tesla a very long time to be able to get to where it's at today. I don't expect it, Churchill Capital, Lucid Motors, NIO, XPeng, Li Auto, all these EV companies to take as long as Tesla did, only due to the simple fact that now that the EV market is a lot more explosive, there's a lot more growth, and there's a lot more projections that are kind of starting to happen for a lot of EV companies. Obviously, the Biden administration is endorsing a lot more EV companies, but I do see Churchill Capital making slight of a recovery in the short term. And the reason I do, aside from the fact that the EV market is very explosive and bullish, but it's also due to the fact that right now we're also got hit with a chip shortage, which is taking a lot of tolls on the EV markets. But once the smoke actually blows over, a lot of these EV companies are definitely going to start seeing all-time highs once again. Although it is going to take time, like I said, it's all about a patience play. So where do I think Churchill Capital is going by the end of the year? Me personally, by the end of the year, I could see Churchill Capital retracing back to those $66 levels. The reason I say this is once the company has been more established, once the company starts selling cars, and once the company actually gets itself on the road, then people are going to be flooded back into the stock. But right now, there's not really a reason for people to wanting to kind of go back into stock in itself. Once basically the rumors were confirmed that Churchill Capital is merging with Lucid Motors, a lot of people just started to sell it off. And I don't understand why, but Churchill Capital has lost a lot of value. And for me, I think Churchill Capital is a very oversold stock. I do think that the stock does have a lot of long-term potential to be a very great company. Now, a lot of people are speculating that, that Lucid Motors is never going to be able to catch up with Tesla. Lucid Motors is coming after Tesla. Lucid Motors does want to compete with Tesla. I don't know how much of a chance Lucid Motors can actually stand against Tesla. Tesla, like I said, being the EV giant that it is, it's going to be difficult. But with rising wants in the EV market and with rising wants in EV demand in itself, this puts Lucid Motors in a very good spot to do very, very well as a company. I think the company does have a lot in store for itself. The company, like I said, has topped of its reservations, but has not actually sold a product yet, which is kind of slowly turning off investors. Like I said, when it comes to investing in a lot of these EV startups, you have to understand that a lot of it is just a patience game. Some of these EV startups don't even make it. Look what happened to Nikola Motors, EV startup that ran up all the way up to $100, then slowly fell back down. If you look at Hyliion, same thing happened. Went all the way to about $60, $70, and now it's currently sitting pretty close to about $10. And Lucid Motors is in the same boat, but I know that Lucid Motors is going to do well because Lucid Motors is a very well-established EV company as it is. Like I said, it has a lot of funding that's already been given to the overall company. It has factories made, and they're trying to build cars as fast as possible. Another thing that kind of turned off investors, though, was the fact that, Churchill Capital or Lucid Motors, they kind of delayed their production a little bit, which, like I said, did turn off investors in the short term. But I do know that Churchill Capital does have a lot upside potential this year and well into 2022 as well. Like I said, taking a look at the one-year chart, the stock is still up 123% of its value. There's a lot of people out there who are holding the stock at a $66 average, $60 average, $50 average, and they ask for recommendations on what I should do. If you've done your due diligence and you truly believe in the company, the best strategy to take there is to start averaging down on your position and hold for the long term. Like I said, I do know that Lucid Motors is going to do very, very well in the long term. I do see a huge recovery from Churchill Capital by the end of this year and well into next year. Like I said, we got hit with a chip shortage. We got hit with an EV retraction. Like I said, a lot of the EV stocks have fallen from their recent highs, but I'm almost confident by the end of the year that these stocks are going to resurface back to their all-time highs, and I do think that these stocks do have a lot more upside potential than they do downside potential. Like I said, right now where Churchill Capital is currently sitting, $22, $23, this is a huge support level for Churchill Capital. And people do think that the next markup for Churchill Capital is going to be in the $30 range. Like I said, the EV market in itself has not been doing too well, and a lot of stocks have been trading sideways. But with patience in the market, I promise you guys that the stock is going to retrace back to its all-time highs. With that being said, guys, that's all I really have to say about the video. Let me know down in the comments section below, guys, what you think of Churchill Capital stock. Do you think Churchill Capital is going to retrace back to its all-time highs? If you guys own Churchill Capital stock, how many shares do you guys own and what's your average? I'm always very curious to know. With that being said, guys, thank you. Have a great day.